When a taxpayer is paid for services performed, their status will depend upon their relationship with the employer and the conditions under which they are working. This is regardless of a person's age or gender. Most people working for a company are treated as employees, and the pay they receive is in the form of wages or salary. The employer becomes responsible to pay the employee, withhold certain taxes from the employee's paycheck, and forward those withheld amounts to the federal government. By January 31st of the following year, the employer will furnish the employee with a W-2 summarizing the past year's payroll. We'll discuss this employer's responsibility and process in much more detail in Module 3. Nevertheless, given certain conditions, a person should be treated as a self-employed contractor, in which case the taxpayer is not regarded as an employee, but instead independently responsible for his or her own tax deposits. To determine if a person should be treated as an employee or a self-employed contractor, the IRS has provided a list of 20 different tests to evaluate a person's status. Among those 20 considerations, they look at factors related to behavior control, financial control, and relationship to the business. These are provided in your book. In my experience, I found that these can be simplified and easily remembered by thinking of the abbreviation for etc., ETC. These three letters will help you remember exclusivity, tools, and control. Exclusivity means the taxpayer is providing service solely for one business owner. They are not exclusive if they provide service for multiple businesses. If they are providing it for only one business, it would appear that they are an employee. If they provide the same service for multiple companies, then they are likely a self-employed contractor. Generally, the individual who owns the tools for the service performed is the employer. If the taxpayer provides his or her own equipment, they appear to be a self-employed contractor. If the business provides all the tools for the service, the taxpayer is likely an employee. Finally, the word control. This is probably the most important of the three factors to consider. Here, the question is, who controls how, when, and where the job will be done? If the business controls all these factors by telling the employee how the job will be done, when the work will be done, and where the work will be done, they are clearly earning the role as employer. The more flexibility a worker has, the more likely he is a self-employed contractor. So let's study a couple simple examples. Imagine that William works full-time as a chef for a large restaurant. In his off time, he enjoys a number of personal hobbies, none of which include any type of food. He's told when to be to work, and all the equipment is provided by the restaurant. All the elements of an employee-employer relationship, exclusivity, tools, and control, are evident here. So William should be treated as an employee. On the other hand, what about your other client, Jason? Throughout the year, Jason performs as a clown at various events for different companies and individuals. He has all of his own equipment and schedules the events he wants to do. In this scenario, there's no question. Jason is a self-employed contractor and not an employee. Most taxpayer scenarios you run into will clearly fit into one of the two categories. However, in those rare instances where the position is less apparent, consider the 20 factors in your workbook for more direction. One example of a relationship that seems to fit in the middle between an employee and an independent contractor is that of statutory employees. You'll know when a person is a statutory employee because there will be an X marked on their W-2 indicating their special status. For these employees, the employer is responsible to withhold FICA taxes but not federal income tax from the employee's paycheck. This is because the employee has the right to deduct some job-related costs before determining his or her taxable income, which will be done on Schedule C. The IRS has identified 4 occupational groups that may meet the statutory employee status. They include agent or commission drivers, full-time life insurance salespersons, home-based workers, and traveling salespersons. Years ago, statutory employees were more common than they are today. Each year, it seems professional tax preparers see them less and less often.